Hey, business owners, have you ever felt that the tax code is a mind-numbingly difficult jigsaw puzzle? It is a difficult jigsaw puzzle, but the pieces do all fit together if you know how to use them. Welcome, I'm Larry Evans, and this is another edition of the Millionaire Tax Solution. The first thing I'd like to mention is the fact that there are different accounting methods for income and expense items. For example, most companies that have inventory are required to capitalize the inventory, meaning they can't deduct it at the end of the year because they haven't sold it yet. However, in 2017, a tax law change happened where businesses with gross receipts of under $25 million can actually deduct currently, in the current year, all of the inventory that they have purchased and have on hand at the end of the year. Now, obviously, the devil's in the details. You have to make sure that you qualify for this treatment, but it can be a huge tax savings benefit. For example, one client of mine had over $500,000 of inventory at the end of a year, and we were able to accrue, basically deduct that inventory amount in 1 year and accelerate it by a year. So you say, if I'm just accelerating it, maybe that's not that great of a deal. But as long as the business keeps growing and that inventory amount keeps increasing, you are getting essentially a permanent tax benefit for deducting inventory earlier, which helps your cash flow and gives you the opportunity to invest in your business even greater. The second item I'd like to point out is deductions. Now, you think of deductions normally in terms of payroll, salaries, wages, benefits, all kinds of different things. There are a couple of other ones, though, that you don't often think of. For example, one of which is if you're building a new building or if you're buying a building that's already built, you can use cost segregation to bifurcate that building into parts that depreciate faster than real estate under the Internal Revenue Code. Buildings depreciate over 27 and a half years or 39 years, but non-building items typically depreciate over 5 to 7 years. So being able to carve out a significant portion of a building as a rapid depreciation item really helps your cash flow, helps with financing the cost of the building, and enables you to grow your business faster. The final item I'd like to bring up today is credits. The research and development credit in particular is a great way for companies who are improving their processes, developing new products to achieve a dollar-for-dollar reduction in their tax liability. There's also the work opportunity tax credit, which is available if you hire certain targeted individuals, for example, veterans and people who have been chronically unemployed. That generates a tax credit for you as well that can reduce your taxes dollar for dollar. And finally, don't forget state credits and incentives. Many states have a lot of credits and incentives for you in particular, and if you just take advantage of those, you can also save significant tax dollars at the state level. So are you ready to find the pieces that will save you hundreds of thousands or millions of dollars? Let's get those pieces of the jigsaw puzzle put together for your business and help you save money. And as always, if you find these suggestions and these tips helpful, please subscribe at the button below. Thanks. Bye-bye.